What is up?
Oh, BTC! What's going on? What a run we've had. Interesting little last couple of days on BTC. I don't think I was expecting this to happen. I certainly was expecting that 12.4 supply to be a barrier, but man, we have just smashed straight through it. So where to from here? If you do like what we're talking about each night and on these Tuesday and Thursday night updates and everything in between, make sure to subscribe to our YouTube channel, hit that subscribe button and get instant updates every time we do go live with stuff like this tonight, especially with our trade plan masterclass and session that we're going to share with you. Super, super important for those people that don't have a clear and concise, I guess, as it says, trade plan. You know, you really need to have a set plan, whether it works or not, that is defines risk and defines trading capital and all the bits and everything in between. So we're going to go through that tonight. But if you want to ask questions or more or anything after this session, head to unitytradinggroup.com, come into the Discord and come and trade this market with us at BTC. What is going on?
Decent run, man. Decent rip, to be honest. Exceeded my expectations, admittedly, because I did very well expect we'd get held up. Not only did I expect we'd get held up at 12, I did expect we'd get more than held up here at 12.4, where we got rejected previously, and there's a bit of price action to the left-hand side to say we would have got rejected there as well. But being BTC and, you know, reiterating what I said last night, if you haven't watched last night's video, I suggest you go back and watch it, because I do expand a little bit into the way of, you know, how young the market is and how volatile the market can be because of the market cap as a whole. In retrospect, in comparison to the other markets that are available in the world, like stock and forex, where you don't have these ridiculous, $1,000 candles, pretty much. 12,000 to 13,000. Yeah, that's $1,000 candle. But you really need to plan for this. You need to have in your trade plan, like we're going to go over tonight. We're not going to give you all the answers, but you need to have in your trade plan to really accommodate for both sides of the trade, because you need to protect yourself either from volatility up or volatility down. And in this case, we were looking like we were going to reject at 12.4. Seeing what Steamroller is saying. CCI, RSI is quite overboard at the moment, so we need to protect ourselves from that happening. Fortunately, if you have a trade plan, you would accommodate for this, and you'd be kicking your feet up and calling it a really good day and a nice payday, Ty.
Yeah, 100%. We spoke pretty openly about the positions that we were in and the positions that we sold out of. I sold out today at around 12,850, I think it was, from memory, and I'm comfortable in that. I'm not, and as I said to ads, I sold out a decent chunk of my BTC position. If it continues high, then sure, 13.8 might be on the cards there, and that top supply that we have highlighted there. But I often find, at least with Fibonacci's, that 127 extension does act as a decent level of resistance, as it does the extension. These particular levels, I find from my experience with trading with Fibonacci for quite a long time, are a very good level of support and quite a good level of resistance. And you saw the amount of shorts that were liquidated. I think it was over $300 million of shorts that were liquidated in this particular area. So, a good way to continue to do that is to continue pumping it, I suppose, and short out and liquidate any other shorts that are in this area, or indeed sort of sucker in those serious FOMO buys at this region, and then you could potentially dump it harder as we reach that top supply zone. But for where we are now, I am expecting a bit of a retrace from here. How can we not? Honestly, like, that's such a huge run up, and we've seen here in the past when we have similar plays like this that it starts getting a little crazy. It starts getting a little wicky around these particular areas, and we could very much see the same thing again. So rather than to be trying to catch every move, I'm erring on the side of caution here and sort of getting out of my positions and sitting in USDT and waiting for, I guess, a little bit more of a confirmation of where we stand in terms of market direction. Is this a suckers rally? Are we trying to sucker in the FOMOs to short on them and had these significant dumps like what we've seen in the past? If we zoom out just a little bit, ads, you can kind of see what happens in these FOMO sorts of rallies. We saw it here at these particular levels where we've come up to. Yes, we've breached past it, but I guess, would you, if you were a whale, is that what you would do? Would you sucker in people past these major supply zones, get them FOMOing in, and then short on them at a higher position? That could potentially be on the cards. But every time that we see decent runs like this, we often see heavy pullbacks. So, you can't have these sustained massive rallies without rejections or pullbacks at some point. So if you are in a long position, as we've sort of said, I guess most of the way up, don't get caught in the FOMO and make sure you're sticking to your plan, which is very apt about our session tonight.
And you know what, this sort of price action for BTC is not new, and nor is it unexpected, to some degree. We've had a lot of these parabolic sort of runs in the past, and like Ty has highlighted, we've seen this all before. There's nothing new about this price action, and there's also nothing new about the resulting price action most of the time after these parabolic runs. And go back and see what the result is most of the time when we do have these runs to the upside, that really test the overbought area for quite some time. So look, right now it's a little bit tricky for us to say, yep, we're going to 13.8, and that's where we find it. At the moment, looking at the price action on the daily, we're looking at a level of supply up here. That is the most relevant level right now in the way that supply and demand goes. We are caught up at this 127, exactly like Ty did mention. It is a significant resistance area, like we've like we have explained. Right now, I need a bit of cool off to really gauge where this is going. So more than likely, we'll probably come down and retest this area to see if we can hold this previous level of support where we were sitting on top of previously. If we can hold it as support, then quite possibly we might see it move to the upside type. But we need that next little bit to really show us that direction.
Yeah, absolutely. And yeah, as we sort of said beforehand, it did catch us a little bit off guard, and we've been talking to a number of guys behind the scenes at the moment where we talk about, trading at leverage and trading at spot. And if you were trading at spot as Ads and I haven't traded it at leverage for a little while now, just to reduce some risk because I'm not being in front of the screens as much. When we had these moves like this, when you are trading in spot, it does give you that little bit of a buffer to get out of a position, or to, I guess, to not be sort of liquidated so fast. I suppose if you are trading at high amounts of leverage, 25, 50x, 100x for some of you, massive risk takers out there. So, and that's why we talk about a good swing trading strategy, buying at spot. It really reduces the risk of being liquidated in these moves like this, like what we saw, $300 million worth of liquidations taking place. And when you are, if you find that you're not as risk averse, or you're wanting to limit that risk, then that's certainly a good way of playing things and stepping back a little bit from that leverage trading and buying and selling at spot or at limit or whatever it is that you want to do, and staying away from the leverage game for a little bit of time, just to develop that trading strategy and get yourself more confident with identifying market moves and direction, and then starting to get towards playing with leverage.
Yeah, look, it comes down to the type of trader you are as well. If you're a swing trader that's looking at a higher time frame, 4 hour, 12 hour daily time frame, spot might be the only thing that does suit you, because there is a whole lot of risk that comes with leverage trading, and of course holding positions open, depending on the exchange, of course. But the costs involved of holding a position open for an extended period of time might not suit that trading style. So look, spot trading is a fantastic alternative, and a lot of people that have come into this space have been driven towards leverage trading because of all the associations with it on the social media networks and stuff like that. So it's not the only way to trade. If you want to decrease your risk amount and take some stress out of the trade setup or the trade plan, then trade spot. Nothing wrong with that. And I know I've had a stellar year trading spot, and so has Ty. So nothing wrong with it at all.
100%. All right, let's get into to ETH. We have spoken about this particular level on ETH for quite a fair bit of time now. For myself, it was that 398.22 level. This, looking at the Bitfinex chart, looking at the Binance chart, is very much the same as well. But that was again, that seems to have been a key level where we did see that sort of pin bar pullback. We're now having another retest of that, but as we can see, and as we spoke about earlier on in the week as well, satisfying those overbought conditions potentially coming quite shortly on ETH. Again, that Fibonacci is significant. We seem to have broken through, I guess, now pretty confidently through this demand zone ad. So coming up now is maybe the next play for ETH could be that 27 extension there around that 414 level, that 413 level on ETH, if we don't get a pullback shortly.
I think it's going to be very key to see what BTC does as well. I think it's going to be very influential for BTC to move at the same time as Ethereum in this case, because the only thing we've seen, the only thing that draws me back a little bit with ETH, and I speak about this openly, is that we haven't really had a lot of the same sort of volume and price action that we've seen on BTC, and we know in the past how heavily correlated these two have been. So if we do get a significant movement towards that 13.8 level on BTC, I can 100% see Ethereum going to that negative 27 fib extension, and also getting to the top of that overbought level on our steamroller indicator. So it's going to be nice and interesting to see what happens over the next little bit. Yes, this supply level is toast, However, at this point, it does need a little bit of a pullback as we are getting quite exhausted now. But if we do get that FOMO run over the course of this evening or into tomorrow for BTC, it might push ETH over the edge and towards that $400 mark. Oh, well, it's already at that $400 mark, maybe $413 mark.
And seeing a few little alt moves at the moment, as you kind of do when BTC simmers a little bit. We can see on the right-hand side there, Link, LTC, Matic, Theta, BTC. While it's nice to see a little bit of green like that, I'm still very, very cautious of trading with alts until we get a little bit more of a defined direction on where BTC wants to go, if we're having a cool off or if we are going to continue upwards. So no alts for me at this stage.
Yeah, not with the amount of volatility that's coming with BTC and transversely ETH as well. So staying away from altcoins at the moment is the best play. If we just flick over to the BTC dominance chart, you can see why that would be the case. We did end up getting that level of supply being touched, but nowhere near that pullback. Happy to be wrong with this one, but we've been reclaiming the BTC dominance chart with a vengeance at the moment, Ty.
Yeah, 100%. All right, the next one we can have a look at is getting into the reg markets, because we do want to get into these trade plans and everything beyond that as well. So, of course, looking at everything that we do on the reg market stuff, it is just our opinions. It is certainly not financial advice. If you do want to seek financial advice, have a chat to your financial advisor.
So I've just cleared the recent level of demand that we drew in, I think, last night with the DXY, and it's no surprise that we've had some slippage on this market because of what's happened of late. There's some movement on the SPX and the ASX and bits and pieces like that, but not as great as we'd like to see. However, the US dollar is slipping quite significantly, and it's not surprising that BTC reacted in the way it did. Because honestly, BTC USD is the main pair. It is paired against the DXY ultimately, to gauge strength. So if we're getting slippages, or big slippages like we're seeing right now on the DXY, then that's going to be one of the key factors that's really bringing that volume into Bitcoin. So if we do see this continue towards the downside, 92.4 was that level that I've been speaking about as of late. This supply just to the lower side of where we are now. But right now, Steamroller is giving us the green light for a little bit of a relief rally, right to possibly back up to this level of supply at 93 even. And we've observed in the past how accurate Steamroller can be, and we have seen this happen before, where we've been slipping quite significantly. We see Steamroller light up green. We get our relief rally to make a lower high, and then we continue down. So we could possibly have that sort of relief over the next little bit, and then we would possibly, that's the idea, continue down and create that further lower high for a continuation. So that's what I'm looking at so far with the DXY. If I had to say where the rally might end up, 93 would be where I'd pick to primarily start that. And if I draw in a horizontal ray to really give us an idea, there is a fair bit of price action and liquidity just to the left. We've got support and resistance flips all alongside that horizontal ray just to the left, and of course this most recent one on the 13th of October, which it acted as support. So if I had to pick this one, I'd be saying the USD or the DXY will be heading back up to our 93 even level to maybe give us a retest and possibly a relief for now. So moving on from this, we'll have a quick look at the... I don't think I need to look at gold. I'll have a quick gander at it. So gold right now, and I'll draw in that level of supply that we could probably easily see. We've got a nice pivot point happening on that level at 1930, which has proved to be that level that we topped out at just recently on the 22nd. So today, only earlier today, we are retesting that 1930 level. If we do get more slippage on the DXY, we can expect gold to continue. And it's been an interesting one, actually, because we haven't had the same sort of price action that we've seen on Bitcoin as we've seen on gold as of late, because, maybe these aren't as correlated as we once thought. Who knows? but that's what we're reserving right now for gold. But moving on now, I want to have a look at the All Ords on a daily time frame, because it's a little bit interesting to see what this is doing. We spoke about the other day about this supply possibly being, the top of that move, and possibly being the catalyst for a continuation and a move down on a higher time frame, or a larger scale of things. And it's going to take a bit of time, if I'm honest. We've hung around this level for quite some time now. These movements to the upside and the downside more than likely or strike me as sideways movement, and nothing too drastic. Besides the fact of this one where we came and retested that level of supply, this could be the last hurrah for the All Lords and the SPX before we start to see that downturn that we've all been expecting on these markets. So I'll just give it a little bit more time over the next probably couple of weeks, and possibly we'll see this start to decline. Steamroller is obviously quite accurate on regulated markets. It's going to be one to look out for over the next little bit. And the last one is the SPX, where we're getting a lot nicer price action, if I had to really admit. And if I draw in the relevant level of supply and demand there on the daily time frame, we can really get a better idea on how this is moving throughout its market cycle. So a very interesting level. We've had a pivot point, come this 3,200 point mark. We've come and made our higher high, came back, retested our level of demand that we identified just to the left there, and then retested that pivot point, and have failed over the last week or so. So this is one you have to keep on your radar as well. If you do trade stock on a grander scale, if you do look at the All Ords and the ASX quite regularly, and for you guys over in the US, I know you watch our videos as well, something to keep in mind where we've got that rejection there at 3520, and more than likely this will kick off some form of a longer downtrend. We might even come down, retest our first level of supply, which is around 3360, and then come across and retest that 3240 again before making our ultimate decision on market direction tie. That's all I really wanted to look at across these markets tonight. Keen to get into these trade plans, though, have a nice discussion on what we think trade plans should be.
Yeah, for sure. And then what we'll do is we'll go through just a few little dot points, and then Ads will bring up our trade plan journal, where we can probably talk about this a little bit more in depth, and sort of show you the benefits. And like we said, yes, we sell a trade journal on our website. That's cool. It's a very small investment if you are serious about trading. But if not, I'm sure there are some pretty cool ones online that you can find. But we're just going to show you sort of what we document and how we document it, and how you can emulate the same thing. So I'll share my screen,
Yes.
and we'll go through this. I guess just some dot points of a trade journal, and maybe what you might want to do for yourself. Ads is going to allow screen sharing, and then I'm going to share my screen.
There you go.
Here we go. Thanks, sir. Boom. All right. So getting into trading plans. For everything that we share here as well, when we do go through it, we do have our trade journal on our website. It's $15. If you want to make the investment, great, and ask us lots of questions. If you don't, that's totally cool too. So I'll just preface this as it is by saying that. So trading plans. So there's a whole bunch of things that are included in trading plans. It's not just a journal. It's not just a strategy. It's encompassing everything that makes having a strong trade strategy really in one place. And if you aren't documenting things, I think you probably need to have a little bit of a rethink about how you approach the market, whether it be trading cryptocurrencies or Forex, because while you might not have a trade journal in place, you'll find that as you start documenting things or writing things down on a pad with a pen, or putting it in a trade journal, you're subconsciously sort of brain dumping things that maybe you haven't thought about before, because it forces you to take what's in your mind and what's stressing you out or what's holding you back from trading in probably a little bit more of a calculated way, and has it there sort of visually in front of you, so you can look at it and say, oh shit, I did not realize I did this in this trade, or I didn't realize that I was entering too early or exiting too early probably too late. My risk to reward ratio was too skewed. My trading capital in each trade was too high or too small. My leverage was too high. There's a whole number of variables, and having a trade plan really encompasses all those sorts of things that make you the trader that you are in the most comfortable way that you can trade, and puts it all there in a step-by-step process. It really is so important. So some of the trade plan rules for success is it needs to have a good structure and flow. You can't look at your own trade plan and be looking at it and going, what the hell does this mean? You need to understand it, you need to believe it, and you need to trust in what you put in this plan is going to get you to a more profitable position. We were talking to someone in a one-on-one session the other week where this particular person had written down, I suppose, trading affirmations. And the first thing I said to this person when they read it out, I said, do you actually believe what you're saying? And he said, without a doubt, I do. And I think some people put things in a trade plan that they think they need to put in rather than what's best suited for themselves. So be mindful of that. It needs to have a good structure and it needs to flow with what you're doing. Don't try and reinvent the wheel. If you find that you're a good Ichimoku trader or a Fibonacci trader, double down on that. Don't try and find 10 different indicators that give you the bias that you feel you need to see to enter or exit a trade. Next, right at the top, you need to have the preliminary rules to follow. You need to be open your trading plans and it needs to smack you in the face immediately. This is the type of trader that I am. I'm a swing trader. I'm a day trader. I'm what type of trader it is. You need to have all of your rules immediately there at the top of the page. So every single time you open it, that information is subconsciously going into the back of your brain and reminds you to follow that set of structure or those preliminary rules. Next, needs to be black and white in terms of what the trading strategy used is. Don't say I'm this type of trader and then jump on the charts and start trying to trade in a different way because you feel that's going to give you better results, or it gives you that trading bias. You think you're short, well, I'll go to a different strategy that tells me that maybe I'm going to be long because that's what you want to tell yourself. It needs to be black and white, very simple, and it needs to encompass those 1 and 2 rules above it. Next, 4, if you have multiple trading strategies, you need to have multiple trade plans. And we spoke about this in our inner circle when we used to have a private group a few months ago where I was doing swing trading, but for a little bit of fun, I was also doing quite a fair bit of scalping, and that changes the dynamic completely. It changes how often you're in front of the screen. It changes your risk to reward. It changes leverage. It changes some of the indicators that I would use, the time frames that you trade on. So if you have multiple strategies, treat every single strategy in the exact same way in terms of documenting and having a structure in place for each of those. Next, needs to be in a workable flow. Again, it's very similar. You need to have structure. It needs to be black and white. You need to have a good flow. It's got to be in a 1, 2, 3, 4, 5, 6 step process where every process complements the other and gets you closer towards that ideal entry or that ideal exit. That's pretty self-explanatory. Number 6, the most logical of trade plans will be a step-by-step, clear instructions according to outcome. So if I'm looking for this amount of dollar value gain or this percentage amount of dollar value gain, you need to, again, have those step-by-step instructions that give you the logical steps to get to that outcome. Very, very simple. So according to this, we need to break this down even further now to better understand what sort of things we need to encompass to get us to those outcomes. So if this happens, this needs to happen. This is really, really logical. If you find that 2 or 3 of your indicators line up for an entry, then you need to make that entry. And if you're wrong, you're wrong. But at least you know if you were wrong, you can document it and you can deconstruct or reverse engineer that trade to understand where you might have gone wrong or what you can add to that trade plan to get you to a more satisfactory entry or exit. So this way, amendments can be made to any stage of the plan if the plan fails at a certain stage. If it's too convoluted and there's too much in it, you're not going to be able to break down that trade to identify exactly where you may have went wrong or where the information that you put in there was maybe skewed to one side, and you need to take a little bit of another shot at refining what it is that you are defining as an ideal entry, exit, or profit level. So if you're winning consistently, how can that be improved upon? We know that, as we said, as Zoran Cole said in our podcast episode with him, statistically, the more that you win, the closer you are to a loss. So how can you minimize those losses, and how can you reduce that risk of potentially having losses after a consistent winning streak? And you need to have adjustments logged. and you need to fall back. I need to have fallbacks if amendments don't work. So this is what's so important about having this trade journal. If things are changed, or if your strategy changes, you need to have that log to say, all right, so on the 22nd of October 2020, I made this pivot to my trade plan and my trading success went up 10-15%. All right, I made this change and I started losing more. If you can go back and visually see where those changes occurred, you can then take those analytics and that data and understand what adjustments need to be made to get yourself back on track, or to improve on what you already have successfully in place. So talking about trade journals, if you don't have a trade journal, why? Like I said, it doesn't have to be our trade journal. It can be any trade journal. It can be a pen and paper. And I went through that pretty in depth with our students, our prior students, a little while ago, where, like I said a moment ago, where I was talking about my scalping strategy, and I love to document on pen and paper. I find that when I write things down, it retains in my memory a little bit more, and I love the physicality of having a book and being able to go through and look at dates and stuff. And this was before we created our trade journal. Now it's all exclusively in our trade journal. So I had everything documented on a pen and pad. These were my entry conditions. These were my exit conditions. These were the indicators I would use. This is the time frame that I trade on. This is where I trade. This is the asset that I trade. You really, really have to get so deep into this trade journal to really be able to look at it and understand each and every element of what makes a successful trade in your eyes, because my trade plan could be and may be completely different to yours, or completely different to Adam's or Dory's or Art's or Reese or someone else. All the guys in our Discord, our trade plans could be completely individual. So don't think that just because you see a trade plan template or something online, you have to abide by that. But at the end of the day, a trade journal is accountability, and that's the most important thing. It's keeping yourself accountable, keeping yourself on track. And as I said here, they're designed to keep you on track and accountable for your trade entries and exits, amongst other things. But we're looking for ideal entries. We're looking for ideal exits that are structured via a set criteria. They take into consideration predefined by your variables, including risk to reward, position sizing, trading objectives. It could be monetary outcomes. It could be percentile outcomes. It could be mastering a certain asset, whether you're trading on cryptocurrencies or Forex. There are so many variables that go into what you can define yourself as a successful trade structure or plan as defined by your trade journals. So most importantly, and this is where we will wrap up this part of it here. It helps you to define what type of trader, should we say trader, what type of trader you are, or what trader you want to be. And we find this so often with the guys that we talk to behind the scenes. They come in and say, well, I'm a scalper, or I'm a day trader, or I trade intraday, or whatever it is. And we say, well, let's break that down. Why are you like that? Because I saw someone on YouTube say that was the best way to trade. Or if I trade on the 5 minute or the 10 or 15 minute trades, I can trade more positions and make more money quicker. It's like, okay, well, that might be the case, but why is that? And a lot of the time, the people that we speak to can't really answer that. So when you really get down to the nuts and bolts of things, and you reverse engineer the previous trades that you've done that were more successful than others, you might find that 9 out of 10 successful trades that you had, you were trading as a swing trader on the 4 hour using supply and demand, or using Ichimoku to gauge trend, or whatever it was. And then you fart ass around, and then you go down to the 5 minute trades, and then your trade success just gets thrown out of the window. So you really need to go back, refine, lose a little bit of money, or trade with very, very small position sizes, paper trade, whatever it is that it might be, and get a high amount of data that you can then deconstruct to understand what type of trade suits you, what type of time frame suits you, and the conditions for entries or exits. On our website, but more importantly inside our Discord, we do have a very basic trade plan template. And this is what we've got here. This is totally free. You can download it directly from the Discord. And, my trading goal might be to get to a $5,000 trading portfolio, or to send my family on a holiday to Greece next year, in 2022 or 2050, when we can finally visit overseas again after all this shitty COVID stuff happens. So that's the benefit of having those right at the top of your screen. This is your why. This is your why. And nothing comes successfully without a really, really strong why, that subconscious drive that pulls you. It could be a family, it could be your kids, it could be whatever it is for you. This is why you do what you do and why we're trying to get ourselves to financial freedom. Indicators that I'm going to use: Ichimoku. It might be fibs, and it could be Stotch RSI in my case. Timeframes that I trade on: 1 day, the 4 hour for entries, and the 1 hour for confirmations. The times I trade: well, I'm a pretty busy person, so maybe I'll trade at 10 p.m. to 12 a.m. Or maybe for you might trade it at 7 a.m. to 9 a.m. when we tend to see a lot of action in the crypto markets. And I might trade on a Monday, a Thursday, and maybe I trade on a Friday, and I take weekends off. So what am I looking for? Well, in my case, as an Ichi trader, I'm looking for a TK cross. I'm looking for a Kumo twist, and I'm looking for a Stotch RSI cross, whether that be bullish or bearish. I enter when we get three. For myself, when I was looking at scalping strategies, it was 3 conditions that I would enter. So let's say it was bullish. I would have a bullish TK cross below the cloud. I would have a bullish Stotch cross, like a bullish divergence Stotch cross. And I would have, let's say I've got an MA cross using 10 and 20 MAs. This is very, very basic, and it could be the opposite of that. I have a bearish TK cross. I have bearish divergence, and I have a bearish MA cross. Now, my risk to reward, my risk per trade might be a maximum of 3%. My risk to reward, whatever it is for you, could be 2 to 1, and my maximum dollar per trade could be $10, and that will keep me accountable. And what I do is I then take that, I print the fucker, and I stick it right on my wall, or I put it right above my computer monitor. That way, every time I walk into my office, every time I look at my computer, my trade plan's smack bang right there in my face. It's the first thing I look at, and it's the last thing I look at when I turn my computer off. And that subconscious, consistent exposure to that trade plan becomes second nature to you. You want to become unconsciously conscious of what you are doing when you are trading, as Jordan Belfort or the Wolf of Wall Street would say. You want that to be consistently in the back of your mind, that it comes to a point where you don't even need to look at your trade plan or your trade goals to know exactly what it is that you are looking at to consider entries or exits. I'm going to hand over to Ads now, and we're going to have a look at our trade journal, which is what we got here. Again, you can find that at Unity Trading Group. Go over to the indicators pack, and then we've got everything here. It's a part of the premium, the trade coach, and professional trade packs. It's a beautiful, beautiful, beautiful thing. It allows you to start new trades. I'm just going to give you a very quick brief overview while Ads has it there on his screen. It's basic, but basic is best. And the whole reason why we kept it so simple like this is that so nothing can be confused. We've got the information to start your new trades. You can document days and times and the pairings that you had here on the left-hand side. What are you expecting to happen? Where are you expecting it to happen? And you can follow the trade along. You can post your trade image here and trace the end of the trade image there. Index, Forex glossary, crypto glossary, habits, and risk calculator, Ads are going to go through in a second. But if you want to get your hands on this, you can go to Unity Trading Group and get it for $15. It could potentially be the best $15 you ever spend for your trade setups. Ads, are you ready to go, brother?
Yeah.
All right, I'm going to start my share, and Ads is going to jump on.
All right.
Take us through some of the trade journal stuff, and obviously the importance of having a solid trade journal. Take it away, Ads.
All right. So just circling back just briefly about the trade plan. So, a little bit about our trade plan. It's very, very basic, as Ty said. However, it's a base for you to build upon. So whatever you see listed there, so what time frame I trade on, when do I trade, what am I looking for, what indicators do I use, what trading strategy am I using, the goals and everything like that, that's just a base. So you can take that, go into Word, go into Excel, go into whatever program you want, even do it on a pen and paper, to expand and create logical steps that you need to take so you can make amendments very, very easily. So that's what we're trying to get at with that very basic trade plan. However, trade journal, one of the most important things to do. So you can't make amendments to your trade plan unless you document the trade and see how that went according to the trade plan that you're using. So if it didn't work or something needs to be changed, then you know exactly what step you need to amend and how you should amend that. So keeping yourself accountable is the best thing to do, and the trade journal is going to help you do that. So like Ty said, we can start a new trade, and then it'll give you the date that you want to list the trade as. So we'll say today, for example, press OK, name the trade, we'll just keep it standard for now. So with the date, we've got the pairing, we've got the 1 day bias, is that long or short? So you can click down bullish, neutral or bearish. 4 hour bias is the same. Risk to reward, you can type that in. Obviously the 2 to 1 or 3 to 1 or whatever you want to do. Trade size according to your trade plan. So 1 to 3 to 5% depending on what you're trading, the time frame. If you're a swing trader, position trader, breakout trader, this can all be done according to what you are. Expected profit is all primarily or preliminary things before you're entering the trade. Where do you expect to take profit? How far is it away? Expected profit could be your first take profit level or could be your last expected profit totally. However you want to set this up is up to you. Expected loss, if you take it, we have that in there because we know that 99% of trades out there should have a stop loss, especially if you're using BitMEX, especially if you're trading with leverage, with margin, Binance Futures, Bybit, anything like that, anything that you're borrowing to really fulfill the order, you need to have a stop loss. Levels, support, resistance, supply, demand, retracement in terms of fibs. So if you're looking at a market that's coming down and you're looking at Fibonacci retracement, what is that? The extension level, as Ty likes to use, 127 fib or negative 27 fib extension. And then the breakout level if you're a breakout trader. Not all of this needs to be filled in, obviously. It needs to be tailored to your use case. However, it's all there for you to use. Confirmation checklists. So examples are there. Example is when price gets to X or Z, I'll sell 50% of my position and move my stops to Y. So that's a really good base and something that I've been talking to a lot of guys behind the scenes where if you get to your take profit, you should be amending or taking a different direction that your trade plan says and making amendments to the trade so you can obviously protect yourself and protect capital while you're in a trade. So analytics, what do you expect to happen by daily close? What happened at daily close? And then how long do you expect this trade to play out versus how long did the trade take to play out? What do you expect to happen by the end of the trade and what happened by the end? So this is keeping you accountable as well. So up, down, left, right, it's all there. And we need to follow that up with pasting a snippet of the trade. So what I'll do, I'll show you how to do that. If we go back to the chart, okay, whoops. Just say we want to buy off demand, for example, and we want to take this snippet of the chart. We go to image URL. We want to save the image. It'll bring up the image there. We can copy that. So right click, copy image, go back to our trade journal. You can paste that or not. Let's try that again. There we go. Make that a little smaller. All right, and there's your start of trade snippet. Paste it into the trade journal. This will keep you accountable. So when you roll back and you look at some of these to review, you can say, okay, what was I thinking at the time? I was thinking this is the supply, this is the demand. Where's the take profits? Where am I going to enter? Where am I going to exit? And then by the time you get your conclusion, so you paste another snippet, you draw your conclusion in terms of progress. Did it do well? Did it do poorly? Why? And then at the very end, when you go back and review these trades, you can say, why did it happen and how do I fix it? These are probably the most two important boxes in the whole spreadsheet, because it's going to keep you accountable as to what you did wrong, if it was wrong, and what you can do to fix it if you need to fix it. So if you have a few trades in succession that fail, or you're on a losing streak, or whatever it may be, what amendments and what changes can you make to that trade plan to really change the direction that you're overall going to take for the trades that come after. So what you can do, you can save the trade and return. We can go back to the index. This is your index of all the trades. So if you click on the index, it'll bring you back to that trade that we were just in. All right. Forex glossary is self-explanatory. Crypto glossary is also self-explanatory. We've got all the bits and pieces and the terminology that we use, in the Discord, or even on exchanges that you might find. Habits is a good one. So the bad habits that you can really document there. So position size too big is that example. And as you use these position sizes too big, if you do that again, it will add a tally there. And the higher the tally, the worse it is. So obviously you can do this over a month, for example. You can see how many bad habits you knock up, and then you can try and work on that to really move that number down and get yourself on a better trajectory. So a nice little inclusion there. And then we've got the risk calculator. So the risk calculator is for spot trading and leverage trading. Unfortunately, it's not for Forex at the moment. It's really built around BitMEX and the 1-to-1 USD XBT ratio there and that contract size. But you got the spot trading, you're selecting your risk management, so 1 to 3 to 5% of your stop loss. You put your take profit level, and then it will give you your trade allowances, and then your win and loss risk there, and your gain depending on what direction you're trading in. Obviously for spot you're only longing, but you can see the trade primarily play out before it's happened on the risk management calculator on spot. Leverage is much the same. So trading account balance, your risk management, your stop loss, your take profit, cost per contract. So this was originally built for BitMEX. So your cost per contract is $1 per 1 XBT. And then you've got your max stop loss allowance, and it's going to tell you how many contracts you can use in your leverage in terms of your capital, your win on the trade, and your loss, depending on obviously leverage and everything like that. So it's a really good tool. We've had a lot of good feedback on this lately, especially the ability to start over 200 trades and be able to return on those trades and check the progress and the results all in one little area. And then you can get a decent indication on where you are at the end of every month. So not a bad little thing. And then obviously the last thing I'll touch on is you can export every trade as a PDF. So if you want to export an entire month to have those records on file, which I recommend you do, and it has that functionality as well. But we've been going on for about 45 to 50 minutes now this stream. That's pretty much all I wanted to cover, Ty.
Yeah, I hope that sort of reinforces and sets in concrete the benefits of having a solid trade plan in place. Just the risk calculator alone on that trade plan is worth the investment, because it helps you to identify where the amount of capital that should be going into a trade, and where you need to consider placing those entries or exits based on the data that you've aggregated from your trade plan and your trade journal. So I hope you enjoyed that. If you have more questions, come into the Discord, unitytradinggroup.com, and ask everything. If you want to know more about the way we trade or things that we can share, please let us know in YouTube or in Discord, and we can plan next month's masterclass. as ads has there on the screen, unitytradinggroup.com. Come on in, have a little bit of a look around. Some of the best guides on the internet and all of those resources that we have there can be found in the indicators guides, and listen to the podcast too, the Trade Hacker podcast. We speak to Zoran Cole about his $1 million ETH trade. We talk to Bitcoin Jack about this BTC markets. We've spoken to a whole bunch of incredible traders. Crypto Says how to use Ichimoku from one of the masters in this game. I highly advise you have a little bit of a listen to that, all 100% free. We don't charge for any of the podcasts or the guides or anything like that. We just charge a nominal fee for the indicators that we put so much time into that we use every single day. So without further ado, thank you for listening, and we'll see you on the next session.
Thanks, guys. Thanks for tuning in.
Bye.